Well, good morning, everyone. Good morning, Jeff. How are you today?
Good. How you doing, Roger?
I'm doing well. Folks, welcome to the Big Picture with Jeff Zananeri and Roger Scott. We do this every Tuesday. You will get a chance to watch this on YouTube, and soon we're going to be doing these live. What we want you to do is like these videos, subscribe to our Wealth Press YouTube channel, and most importantly, post your comments below. I actually read every one of them, and I'll respond, and I'll forward it to Jeff. And if you have a good question, we'll answer it for everybody. So please, please, please participate. And as we go live, write down your question that you may ask Jeff and me live. I think that'll be really, really fun to do in our first session. All right, I wanted the record button to start right away because I didn't want to get into any comments before we actually got into it because there's so much to talk about today. So how are you doing, Jeff?
I'm good. Good.
Good.
Market's making things a little bit better. It's been too much bearishness.
Oh, talk about too much bearishness. I mean, geez Louise. Every indicator, every sentiment, I mean, everything, every statistical study, everything you look at is telling us that this market is just grossly oversold in the short term.
Yeah.
Earnings are here. You want to comment a little bit, talk a little bit about what's ahead. As you're talking about earnings, I have this sheet it's a little cheat sheet that I made. It's between everything that happened from Monday all the way till Wednesday. So if you want to if you talk about them, I can point them here to the EPS and so forth.
Yeah, we were talking last week, and I said one easy layup sector that I think is going to be the banks.
Yeah.
Trading. Look at what they did in trading. Goldman Sachs crushed trading. They made about $500 million more than they were supposed to. They're trading in the single digits on PE. And so people were looking at those stocks as super cheap. They're printing money. The recession hasn't really rolled into finance quite that part of finance quite yet. So conditions are still ripe and they're cheap either way. So if we don't get a severe recession, the stocks are going to bounce hard if they go back to a normal multiple in the low double digits. So, those stocks, like we talk a lot about on this show, about low hanging fruit, easy setups, situations where you don't have a lot of risk compared to reward. And just like I've been loving energy, I've been loving financials as a place where you can get a pretty good bang for your buck with like a limited downside compared to some of the higher flyers that still have a lot of froth, frankly, even after that sell off.
I agree with you. And I haven't really looked at the financials from a momentum level, but from a momentum perspective, they are really, really overdone right now. Looking at the number of stocks trading above the 200-day moving average, and I'll go back. I can't go back here before 2014. I don't have a Bloomberg terminal like you. I think you can go back to God only knows beginning of time. But nonetheless, as you could see here, this really confirms what Jeff is talking about, folks. I mean, look at this. This is 2020. This is the previous. I wish we had a 2008 here, but just to give you some perspective of how it shakes out. I mean, look at this thing here. It's really low. I mean, we are really, really low, and this goes back to 2008, so you could see get some perspective here. We're not really far off. And this is why I've been telling people, like, this is not the time to sell your favorite grandma stock. This is, I mean, those days are this was the time to do that, not right here.
We said that last week too.
Yeah.
That was a big thing we were saying. Like, don't panic sell. Don't panic on the CPI. CPI came out strong and the market rallied.
Yeah.
Gave back the next day, but this rally is continuing now this week. People are there's a little bit of short-term exhaustion on the selling. Unless you get like new bad news, I think the market's poised to go higher. I think there's more upside for sure.
Well, the way I looked at it was this: the rally that we had, Oh my! Look at that! My cat decided to jump up here. That's Clyde. Clyde decided to make an appearance today.
What up, Clyde?
Hey, Clyde. How are you? How are you, Clyde? They like him more than me here at Wealth Press, I got to tell you. He's very popular around here. So we'll just kind of let him do his thing. As this is how I looked at it. The bottom of the U.S. market from all the negative news I saw came right around here, and then we saw this. This was the earnings rally last quarter, and then right here, most of what we saw here was global news. Really, global news. London, England, Bank of London. China, Asia, Japan. I mean, really, the world really kind of fell into this whole environment. Right. And then but I didn't see a lot of it from the U.S. So when the Fed came out with a really bad CPI and retail sales weren't good either on Friday, I think it was 2 days later or maybe the next day. But I know retail sales was on Friday. I think CPI was on Wednesday or Thursday. But it doesn't matter. It didn't do it. The market rallied off of that too. So to me, the fact that small caps are not really, and I don't like these stocks. I'm not a fan of these stocks. I'm simply pointing it from a sentiment perspective. If you look at it, I mean, yeah, we kind of dipped a little bit here, but I mean, really, if you think about it, this thing made a low back in May. So to me, it looks like the global economy is catching up, but earnings are saving the day again. At least that's what it looks like right now. But one thing I wanted to comment before moving ahead, and this is something that I'm really, I want to get your take on it. I made a comment on it a couple of times already. I mean, so Netflix, right? They were expecting $2.13. Look at what's baked into this market right now. Negative 33% in the EPS. I mean, how the hell does a company not outperform that if 33? Now, look, you think that's bad? Look at this. Look at this. This is Tesla, right? Look at this. This is what's baked in.
Wow, yeah.
This isn't my estimate. This is baked. This is if you go to your Bloomberg terminal, this is what you would see. I'm not making this up. They're expecting $1 per share. I mean, Jeff, tell me, how do you not outperform numbers like this? I mean, you go to and tell somebody your EPS is going to be down 46% almost. Hey, guys, I'm going to be down 50% for the quarter. And you come out 40, 35. How do you not outperform these? So are we putting on, my point here is, are we just doing what we've been doing all along and things are just getting worse and the analysts are just continuously downgrading and giving us lower estimates and that's why we're rallying? Or are you seeing some upside with these numbers that are coming out at all?
I'm with you. I see upside. Because I see that, the bearishness swung so hard and everybody, these guys are not dummies that are running these companies. They use it as a hall pass to dampen expectations so that they can outperform, right? So they can deliver on the upside. That's what everyone does. And so you always see if there's a good crisis, everyone uses a crisis as an excuse to suck. It happened with COVID. It happens at jobs. It happens all day long. It happens with contractors. It happens with delivery of your sofa. Sorry. So when you get better than performance than expectation, you're positively surprised. You buy back the stock with two hands. And I think a lot of companies are going to outperform. I think the companies that don't outperform already dampened are going to be taken to the woodshed. So it's a bit of a dicey situation because if you miss or if you guide lower in the future, already puked out numbers, that's going to be bad. That's going to be a bad day for stockholders of those stocks. On the whole, though, I like where your head's at in terms of outperformance, particularly in some of these tech names. Like, wow, 50% down in a year. I mean,
yeah. I mean, look at this. I mean, look at Tesla. I mean, geez, this thing is. Let me just put it up here. I mean, this thing is just. Oh God, you can't type anything in. You know, when you're trying to type something, you just can't do it.
And the computer just.
The computers, yeah. Right. I mean, look at this thing. I mean, 400, 220. And I mean, this company is actually a company that's now making money. So I think this haircut is kind of sufficient, especially for S&P 500 stocks. I think we're going to I think we're going to see a lot of that this quarter. And honestly, I don't think we can answer the question yet. Are things getting better? I think it's going to take us at least 2 more quarters to get to that level.
Yeah, I don't think it needs to be answered. I think in the short run, the problem with the stock market right now isn't the real economy as much as it is the Fed and interest rates. And so the problem is you got this, and I know I keep going back to the same thing, but it's the overarching story. You've got this guy and his cronies and Jay Powell that are going to look at a stock rally, which is already happening, as a net negative to their policy. They want pain. Remember, they don't want to recoup. They don't want companies bouncing back and recouping 20% in a week of their year's losses, which is going to happen invariably because that's how stock market trading works. Overshoots on the downside, bounces too hard back. So I view the big overhanging thing as the Fed the Fed's going to use that as, look, we need it to still get more subdued. We need it. This is too much. There's too much froth. So until the froth is totally done, and it's getting close, I don't think there's so much more downside. I think it's going to be a back and forth story. I think we have more upside in the shortest of terms. So like the rest of this month, I think we bounce. I think there's going to be a big election trade in early November. And then I think the market's going to shift to back to being super Fed centric. And Black Friday, man, a lot of people are counting on this Christmas as still being normal. We haven't really seen how people feel until that. We're going to see at that point if people are really feeling the pinch or not.
Well, I don't know if I agree with that 100%, and I'll tell you why. Because we kind of have. I mean, the retail sales and discretionary data has been. It's been pretty bad, and so I mean, are you saying that it may we may have better than expected, or are you saying it may really surprise worse than? Okay, I got you. Okay.
Yeah, because people, this is slow. The slowest period of the year.
Yeah.
After the beginning of the school year is now. People hold off on buying anything until the holidays. If they didn't buy it before for the beginning of the school year, they said, well, I'll just wait and buy it as a Christmas gift for the kids.
Right.
Or you know what I mean? I'll get a new computer. I'll see what the Black Friday deals
are people still, Black Friday, Black Friday, Cyber Monday, is that what it is? Because I know a lot of people in the last 5 years, they've been switching to the internet part of it, but I think, but I get what you're saying. It's all consumer spending.
It's not foot traffic at the mall,
but it doesn't matter. It doesn't matter.
Companies put their deals out at that point in
time.
Right. They put their deals out in that point.
Yeah. Wow. You're saying it may be worse than expected, and here I am talking about Tesla saying we're down 50%, we're down 46%.
Well, I don't think that the economy. I think the stocks have run in front of the economy, but the economy is lagging the stocks.
Yeah.
Right. Yeah. And in certain places, we looked at Tesla. Tesla's still the world-beating EV company, but that was an 80 PE stock. That's an 80. That's an 80 after a 50%. It was 150 PE before.
Yeah.
So, they're making money and the trajectory is like that. But, like every car in the world is not going to be a Tesla in 3 years. It's priced like it is, kind of still. So there's danger. I'm just saying that there's risk.
There's a lot of risk. Now, right now, what we're looking at the continuous 2-year note. This is going back
nice.
plenty of time, 20 years. Typically, there's an asset that I use, and I just want to give people an idea of how much instability we have. This asset right here, let's see here. SNH. What is it? What is it called? It was a SHT, is it? It's a cash asset that follows the 2-year, but it doesn't matter. Basically, this is the
that's the future.
This is the future, so it basically follows this. But I want to typically my point here is this is the cash asset that follows the 2-year, where hedge funds and institutional guys, when they want to roll money into cash, they would put it into this asset that follows.
Right. That's a great logic.
Now, so look at how and that makes sense because look, from 2008 to 10 years for a decade. If I think it's SMH maybe. No, it's
that's the semis.
I forget ST.
I don't know it.
Anyway, it looks exact. Just trust me on the fact that it looks exactly like this, and it's an ETF, but it tracks the 2-year. And again, folks, this is where I would recommend back in the 90s and the 2000s, when you had excess money in the futures account or excess cash, I would say just put it in this asset, whatever that asset was, or the 2-year. But look at this thing. Look at this thing. This thing has been moving. Really, really moving.
Rates, man. That's obviously like the price is inversely correlated to rates, but the Fed is out here saying they're going to most likely do enough. Like this CPI number was red hot, right? And the jobs number was also too strong. And so we're going to look at this thing as like 75 basis points, most likely incoming at the next meeting. So should the 2-year trade below 4%? There's a case to be made that the CPI isn't slowing down, and this thing needs to go to 5%.
Oh my God!
6%.
Are you kidding me?
Listen, man, nothing's working. How can we know? How can we know what these guys are going to stop at?
That's
the only
crazy.
thing that's going to stop these guys' political pressure.
Yeah,
I think there's going to be a bloodbath in November against the Democrats because of inflation, because of the stock market, because of the economy, because of the real average Joe is getting smashed where it hurts. They're getting smashed on their earnings, and they're getting smashed on the cost of living, which isn't really coming down.
And the
Rents
energy
don't come
price,
back.
gas prices in California are over $8 a gallon right now.
Exactly. Like, so everybody was like celebrating this 20% pullback after 100% increase. And it's like, guys, like, there's certain parts of inflation that don't just roll back. And that's the problem. It takes a little bit longer. You need a deep recession to stop to create a housing crisis. Do you want a housing crisis? I don't know. I don't think you do. I don't
No,
think they're doing the calculus on this. I don't think they're thinking this whole thing through. Do you really want to create a housing market crash at this point just
no,
to slow down inflation?
no,
I don't think
no.
you
But
do.
they're just gung ho, man. They're just gung ho, and that Powell,
You read what like El Ariane says, because he's
yeah,
obviously a very intelligent guy that's run like every major PIMCO, Harvard.
yeah,
Like, this guy
yeah.
is an esteemed economist, but really a money manager. He like blends both worlds almost better than anyone I've ever seen. And he was out saying the Fed has made four like cardinal sins. Four. I had him at two. He's got him at four. You know, and so he's trying to like talk them off of making the biggest mistakes ever. But I don't, and so is Jeremy Siegel
Yeah,
at
Wharton.
Penn, who's also very highly esteemed. But I don't know what these guys are thinking. So stocks I'm hoping, Roger, that we get back to a market of stocks, which is where we both excel, where you have to pick winners and you have to pick losers, and you can fix and tricks within that, and not everything is just like lock limit down or lock limit up.
Right. Yeah, I couldn't agree with you more. This is not good for stability. Reversion to the mean is not working out as well right now.
No.
I mean, obviously, when you're talking about events that happened 3-4 times in history, this is not a time to be a hero. But
No.
and I know breakout momentum levels have been. I mean, everything has been just kind of very, very. I mean, things have been just suffering across the board.
Right.
Implied volatility is high. Um,
Hi.
what? So I'm looking for a few sectors right now to really surprise investors during earnings. I mean, energy's clearly going to be one of them, but I don't even know if that's a surprise anymore. But one of the
Yeah,
sectors
it's not.
no, but one of the sectors that I think may be a surprise is defensive stocks.
Yeah.
I think
I like that sector.
I think government, yeah, I think government defense, I think spending, I don't think that's going to slow down, especially in light of what we're seeing. I mean, every time we hear the word nuclear, I mean, Elon
Everybody
Musk,
and their mother wants to buy a Javelin missile defense system right now.
right, right. So I
That's
think
actually like our number one negotiation tactic with the Saudis in terms of OPEC is we're going to stop selling. We're going to stop selling you this advanced military technology that's being proven in the Russia-Ukraine theater as being so much more advanced than anything anyone has.
yeah, yeah, I agree, and I want to show you another stock, a particular stock that I really like. I know this is the big picture, and we don't talk about individual stocks, but
I
I'm
love
going,
it.
but
I'm taking
I'm going somewhere with this. Have you ever heard of this company before? It's a pretty crafty company that's making all-time highs right now. If you don't know what they do, when I show you what they do, you're going to be like, "Oh, I love this company."
No, I don't know them.
Check
What do they
this
do?
out. Check this out.
That's like that old show I used to watch. You ever watch that show? The Pawn Father?
Yeah, yeah,
I don't know,
yeah.
the guy in
But
Vegas.
what's
They
it?
used-
Yeah, I know what you're talking about. I used to love
Yeah.
that show. I used to
Yeah,
love,
yeah.
love, love, love that show.
Yeah. Wow.
Yeah, but yeah, I mean, in this kind of economy, pawn shops are really this is a no-brainer. Cash is king right now, and a lot of
This is a
people are
great
struggling.
idea. This is a great Pawn Stars.
I knew
That's
you
right.
were. I knew you were going to like this. The P ratio is good. The stock is right now obviously making all-time highs.
Wow.
It's also mid
This is a
cap.
great case.
Yeah, yeah. It's also a mid cap company, and the mid caps are actually and that's the other thing I wanted to talk about. The Russells and the mid caps are actually holding up. They didn't bottom out nearly as much as the large caps. So there's obviously a lot of global exposure in the mid caps than S&P 500 stocks. So they're being a lot nicer to us, and they're actually pulling up quite nice. So that stock happens to be in the mid cap 400. But yeah, the ticker symbol is FCFS. And I really like that stock. I
That's a
wanted to
good
share,
one.
but simply not because of that stock, but because anything to do with any company right now that makes money from hard times is definitely a company you want to look at, like cigarette manufacturers,
Yeah.
liquor companies, um, not paper buyers. You don't want to, obviously, you don't want to, because we may be going to, but anything that raises cash. I'm still waiting for gold. I'm still waiting for gold to rally, but it doesn't seem like
Keep waiting.
it's
It's
yeah,
a
not till
dog.
because the U.S. dollar. I mean that U.S. dollar is taking all the oxygen and
I'm
air out
telling
of.
you, it's kind of like you're like at a music, you're like one of these jam bands, and then it's like your big solo, and it's your time to shine. The spotlight comes on you, and you're gonna have this guitar solo, and then it's just like really weak and terrible. That's what this inflationary environment has been for gold. Like this was like theoretically its moment to shine, literally, and it did nothing on the
Right.
upside. It did nothing.
Absolutely nothing.
Literally everything else in the world, even with a strong dollar, exploded to the upside because of the expansion of the money supply.
Agreed.
M2, but gold did not. So it's like, so well, okay. So when is this thing going to start to matter? I don't know, man.
Yeah.
I don't know.
I mean, look at this thing. I mean, it's like, I mean,
When is it going to matter? I don't know.
it, it's so, I mean, a lot of people are just scratching their heads and they're
Would you
like,
rather have, let me put it this way. So we've had this like super bear market, and I've been telling people, and you've been telling people to be cautious, to keep your capital level high, your cash high. And that was contrary to conventional wisdom a few months ago, where people were like, cash is trash, etc. Would you rather have a whole bunch of dollar bills sitting in an account right now, or a bunch of gold that's doing nothing? I think dollar is the answer, because you can
definitely
buy
cash.
stocks liquidly, like on super fire sales, and make a quick flip and make a bunch of money. There's going to be like once in a lifetime opportunities, I think, in the beginning of 2023 in the markets to buy sectors that are so overly beat down. So the answer is cash. The answer is
Yeah.
cash. And we haven't even had like this pain in real estate that they're trying to do. I was watching, what's his name? The guy, Barry, the Starwood guy, Barry Sternlicht. He was like, there's going
Hmm.
to be distressed fire sales, and I can't wait. So I always like take cues from the masters, the really intelligent billionaires out there that know everything. Not everything, but they have a lot of wisdom. And
Oh,
when you have a
definitely.
guy that's made his bones in real estate like that, saying there's going to be fire sales, have cash. I'd rather have cash for those fire sales in stocks and real estate, in boats and in watches and whatever, than gold.
Yeah, as a matter of fact, interestingly that you mentioned that, I was talking about this with Lance. Toys like boats, vacation homes,
Yeah,
jewelry. A lot of these things are really starting to. I mean, I know some boat
there's
sellers that are starting.
deals. There's
Yeah,
deals coming.
yeah. There's definitely deals coming, and I used to have a property in Lake Arrowhead, which is a vacation resort. A lot of my family has a house there. It's about 2 hours east of LA,
Oh,
up in the
cool.
mountains. You go skiing there. It's
Oh,
fun.
nice.
Yeah, real fun, and you can actually get snow there in the middle of the regular, in California, which is really unheard of.
You can
Uh,
ski
yeah,
right
you could
outside
ski. Yeah, well,
LA. What a
Big
cool
Bear,
place.
Big Bear is just 30 minutes up. Big Bear is a very famous
Yeah, yeah.
ski.
Nice.
And my uncle's had a house there for 20 years. I lived there for many years, and I talked to him yesterday, and he said that right now, besides the real estate market cooling off, it's still a buyer's market in LA, but up in the mountains, things are totally changing. So there is a definite change in consumer sentiment, which is why I thought what you said was very interesting in the beginning. That if Christmas time comes, and if we don't see a really good support, that could really cause us to that can cause consumer confidence to really decrease. But at the same time, that may cause the Fed to slow down. Although I don't know if that'll happen. I don't know if that'll
I don't
happen.
know what the Fed is. I think the Fed is so locked in on CPI, on inflation,
Yeah,
on their metrics of inflation that they use, CPI, PCE,
yeah, yeah.
PMI, and they're so like what's myopic. They're just looking at it like singularly in a
Very, yeah,
tunnel, and
very
it's
tunnel vision. Yeah,
tunnel, and that's also why they messed up. They messed up. Like they don't have traders there. They're not looking at asset prices enough, right? If they did, they wouldn't have let the bubble go as long on the upside when we didn't need all that cheap money, because they would have been like, instead they were looking 6 months behind. They would have been like,
right.
wait, we're having what are these stocks doing? What is this sector doing? What are rates doing? They would have paid more attention to the markets telling them what the prices are than backward looking data that's manipulated anyways. we would have a better situation, but
Agreed.
less.
Agreed.
We
Before I
always
let you go, I was doing a in-person class last Thursday and Friday, and somebody came up to me and they said, "Hey, I don't know if you heard, but China's doing a round face, and they agreed to comply with the U.S. accounting regulations."
Oh yeah,
Uh,
that's old news. That's been out.
yeah, so I wanted to ask you, this is all I mean, do you think that China is really changing their tune, or they're desperate right now and they're up against the wall because of the grave COVID conditions they've overcome and they just need the cash? What do you think? They're gonna change their political view, or it's just gonna be a little short term?
Total bluffing. They're playing poker. Yeah,
Yeah.
yeah, we'll do it. Yeah, sure, whatever. Yeah, yeah, we'll comply. Come
I
audit us. Doors are locked. You can't come in.
I
Sorry.
think so too.
Come
I'm
back.
not.
Come back in 6 months.
Yeah, yeah.
It's gamesmanship. But more important is what the United States is doing in terms of like barring semiconductor companies from selling any assets to Chinese company. Like, think about that, Roger. Like, Applied Materials took like a 30% haircut
Yeah.
on potential sales.
It's
Like, I
it's
don't
very
know.
big. It's very
I feel like
impactful.
things are ratcheting up between China and the United States. The irony is like everyone, one of the main campaign things for Joe Biden was like that he was going to have better international relations with China. And then he comes in and it's been anything but the case.
It's been
So
no, it's been complete 180. It's been a complete
it's
180.
been
Yeah.
as bad as Trump, if not worse, because Trump, they kind of like knew what he was about. Like he was playing the game too. But
I actually think I know a lot of people I'm going to get flack for this, but I think Trump, just due to the way he's built, was actually pretty good with international because he took a more he
why
I
would you
think
get flack for that?
I
Like
think
from the communists that he was excellent
he
at
was
dealing
really
with
good because he treated them the way they
international.
needed to be treated. Right, right. He didn't sugarcoat anything. He treated them
You
the way
have
they
to be
needed.
able to separate the man from the policy and the policy from that's an adult point of view anyways. Like I don't always invest in companies where I think that the CEO is the greatest person in the world. I just look at this person as someone that's capable of delivering results. Politics should be the same. It's not, but
Yeah. So let me just really quickly. You brought up something really interesting that I think a lot of people would want to hear who haven't been with us for a while. So
yeah.
as you can see here, we're looking at the Russell 2000. It's a pretty
Hmm.
interesting story in regards to what you and I just said about how everybody thought that Biden was going to change his tune. So the Russell 2000, believe it or not, peaked. And you know all of this. I'm just doing this for the
Yeah,
purpose
yeah, yeah,
of
yeah.
the Russell 2000 peaked almost a year before the S&P, and then was going sideways while the S&P was still doing this. S&P was still climbing like that, and the
Hmm.
Russell's just doing this. So why did the Russell peak out right here? What made it go up? It was the first presidential debate between Biden and Trump when the world decided or realized that Trump was not winning. And Biden was telling us how he's going to change course on China. So as a result of that, for the first time in a year, these stocks right here started leading ahead. And I said, hey guys, Biden is winning because he's going to be really soft on China. And they went up here, and then we realized Biden's like, I'm going to be just as tough on China. And then boom. But this rally was right here, right here. This right here was hope that Biden was going to win and become really, really soft in China, and it didn't happen. But I just thought it's kind of interesting because I always share the story, and it's interesting you picked up on the same.
Yeah,
Uh,
China's a dangerous place to invest. It's
yeah,
like longer term. There's too many variables. There's so many cheap American companies right now where you have more or less an idea that they're going to be able to do what they do.
I agree.
So why are you going to take on that extra risk for what's not really much extra reward?
To me, that's very similar to trading airline and cruise ship stocks in the
Right.
last couple of years since
That's
COVID.
correct.
I
That's
haven't,
correct.
and I know a lot of people have. I've been extremely cautious with them. I think I've
You
made
can
one
trade them
recommendation.
short term, but like
Yeah.
to be like long term point of view on a on an industry that could have a massive secular shift. I don't know.
Right. Right.
Scares
Agreed.
me.
Agreed. Well, let me ask you this before I let you go. It's a very I'm glad we get a chance to kind of get into each other's minds at least one day a
Yeah,
week,
for sure.
and it's good. Nobody interrupts us. It's very nice and focused. So, what's your take? What would you tell people watching this who want some advice going forward over the next few days. Is it still a good time to buy? Are you still seeing a lot of upside? Do you think this rally just started? Any
I don't
particular
I don't
sector?
see like I mean, I see upside in the short term. I'm trading it. I don't I think you can buy some of the dips. I think you should trade it from the bullish point of view. Till the do you have the SPY there?
I will in a second. There we go.
Yeah, I think you can trade the SPY bullishly for about another, I don't know, 30 points. So up to this $400 level.
Yeah, yeah, that sounds about right. And let me just put a 200-day there. I bet you if we put a 200-day there, it would
But I think
probably,
that's a place to start lightening up on like longer term
yeah,
positions.
you're talking right between that resistance area we hit last time and the 50-day moving average. So right in
That's
between
right.
that, and
Maybe
notice
a
the
little
two,
lower. Yeah, like
yeah,
390. 390
yeah.
seems like a good spot. Yeah.
Yeah.
20
So
points higher.
let me tell you my insight into this for what it's worth, okay?
Mm-hmm.
So one of the things I look for when we're already in a bullish move, up to or down, one thing I look at is I look at large cap stocks, and the way I do it is I screen stocks between $20 and $200 that have a volume of 900,000 shares a day. So it's a meaningful stock.
Yeah.
And when I look at 20-day breakouts and I look at the ratio between them and I look at the absolute number, and what I've noticed is when we have these short-term, like 5, 10, 20-day, runs,
Yeah.
either with or against the trend, I'll notice that this number to the upside gets to about 550, 600.
Oh, cool.
And on the bottom, the bottoms are obviously a little heavier. It gets to about 700, 750.
Mm-hmm.
And I use this not so much
That's
to tell.
interesting.
Yeah, so I use this not so much to tell me if the market is going up or down or what stocks are doing 20-day, because 20-day breakouts are very, it's a lot of noise there. But at the same time, what I've noticed almost every time when I'll see this number at 550, we're like 2 days away from topping out, or this number at seven something.
Yeah. It's just
We're,
getting so stretched.
yeah, so right now, yesterday this number was like at 40, 50, and today it's at 192. So based on what I'm seeing, I'm not disagreeing with your numbers. We still have what I'm trying to say basically is we still have substantial upside before we peak out. I don't think this is it. I think
I
we've
think
got.
it's a trader's tape. I think you have to be nimble. I think there's going to be opportunity. Like, I have friends that text me all the time and they're like, is this the bottom? Is like, stop thinking in those terms, because this people think still kind of in a way, like they were conditioned to think for the last 10 years, that there's like this small window of time where you can own a stock or you miss this window to buy the pullback. But when you have like more than a correction, like bearish stocks or a bearish market, you have ample time to get your position on, and often at improved prices.
Oh, definitely, especially when momentum levels are looking like this. I mean, I mean,
The
when you're,
trend is still your friend always, man.
yeah,
And so we're
yeah,
still in a broken pattern, bear market rallies, in my opinion. I heard somebody on TV the other day saying we started a new bull market, and I'm like, wow, that is somebody just trying to make a soundbite.
yeah.
I
There's
think
no
we're a
evidence. There's
bit off.
zero evidence of that.
I think we're a bit a ways away from that, but
Yeah,
whatever. People
yeah.
trying to get famous as usual.
Yeah, I don't. That's just being stupid, in my opinion. That's just being dumb. So,
Yeah,
Jeff, before I let you go, I know you have something going on today at 1 o'clock.
I
Would you
do.
would you like to
Yeah.
tell us a little bit about it?
Yeah, so I want to talk about this energy super cycle that I see happening. We're still in the beginning stages of it. It's going to be a tremendous opportunity to trade. As always, I'm looking for a tradable event around that, and I'm going to show people how to trade it with hedge also to protect yourself. And I hope you all join me at 1 o'clock, because it's very interesting what I've discovered.
I'm gonna check it out, and please come by my VIP room today around
I will.
12:30. Yeah,
Yeah, we'll
and
talk more about it.
I'm going to talk a lot about energies today and some of the mid cap opportunities that I'm seeing. Some of the energy opportunities that I'm seeing in mid caps. I think I like mid caps right now. So,
Nice.
and small caps, but not like tiny stocks. But look,
Yeah, the
energy is
thesis makes total sense.
the only sector that has green across the board. Look at that. The only sector out of the 11 sectors. So you're definitely onto something. And you and I have been talking about energies for a while, and both you and I have the exact same point of view.
Yeah.
The war is over, until inflationary market is behind us, energies are going to be elevated. And anybody thinks otherwise, they're not thinking clearly, and they're not
Yeah,
thinking
and they
straight.
go higher in crisis, and they go higher with inflation, and they'll go higher if the Fed pivots. There's so many cases for it to go higher.
And Warren Buffett's not going to be chasing momentum stocks that are overpriced, and he's going all in on Oxy. And
Well,
I
that's
think,
the craziest thing if you think about it. He's buying a stock That's one of the best performing stocks in the stock market this year. Still, as we speak, he's buying it. And he only buys things, he doesn't buy things technically, he buys them fundamentally. So even
Exactly.
after it's outperformed as much as it has, it's still a better buy in his point of view, based on what it should make cash flow wise over the next 5 years, than everything else in the stock market.
And
Wild.
that doesn't hurt either, does it?
Doesn't hurt.
Not an overvalued stock, right?
No.
And Jeff, I look at price to sale and look at price to book value. We're
Yeah.
talking the strongest stock on Wall Street right now. You'd be, not you, but people would be dumb to think the stock is overpriced right now. I mean, it's
Well,
just
that's
not.
the thing. He's going after what he can put a big position on in that is going to protect his downside in all kinds of situations, but he has many chances of big wins. And I like to trade that way too.
Yeah, and I also believe he's going to start investing in other energy companies. I can't really say more than I'm saying right now, but I have very strong information or belief or suspicion that he may be
You
investing in.
can keep it at that.
Yeah,
I
yeah, yeah,
think
yeah. Because
fair
folks, I
enough.
mean, earnings expectations are like over 150% up, where everything else is like in the toilet. I mean, this
Yeah.
is a sec. This is so. I'm very excited about hearing what you have to say today at 1 o'clock. Thank you
Cool.
again, Jeff. Folks,
Thanks,
again,
Roger.
this is a great session. Please post comments below this video. If you want to reach out to me, please do. Support at marketgeeks.com. Jeff at joyofthetrade.com. Jeff, I'll see you in a couple hours. I hope you have a
Yeah, sounds
wonderful
great,
afternoon.
Roger. Thank
Bye,
you.
everyone. Bye,
Bye.
guys.